Hello, this is Brian Shannon from AlphaTrends.net. Today is Monday, the 5th of May, 2008. The market's closed, and we had a little bit of profit taking today. Not a big surprise, really, that it seems as though this market's kind of been due for a little bit of profit taking. But, the only time it pays to sell or sell short is when prices are declining, not when you think they're up too much or any other reason. We've been looking at these three, the confluence of these three levels, basically. One, this downtrend line, two, the lows from December, and three, the declining trend line that we see in here. And they all come in right at about this 143.5 or so. Market didn't quite make it up to there on this run, but now we're experiencing a little bit of a profit-taking pullback, it looks like. The volume was low in here today, and the daily time frame does remain above the 10, 20, and 50-day moving average. So intermediate term, we want to remain bullish and give the benefit of the doubt to the buyers in here. Looking at a 30-minute time frame, we had that real nice surge last week. After it looked as though maybe the Fed actions weren't going to provide any stimulus to buyers. The following day, that's when we saw the real movement, and of course Friday we had the gap higher on the jobs report, and then it's been a little bit of profit taking since then. Right now, this level here at about 140.10, 140.20, let's just call it between 140 and 140.20, about 140.20 is where we would expect to see the first level of defense from the buyers in here, defending their bullish positions. And that based on that, we were also looking at maybe this uptrend line is providing a little bit of support. The market has gotten a little bit ahead of itself, though, as we've seen. And, you just want to be cautious while the sellers are in control here. And you can see, based on the 2-day time frame, that the sellers have been in control below the declining VWAP. And on the daily time frame as well, that, it was a pretty dull trading day, and it closed right around the average price that this market traded at. But it does give us reason to just be cautious for a little while this while we see how far a sell-off takes how far it takes the market lower. But again, the daily time frame still looking good within the context of a potential inflection area on the weekly time frame. So just all around, good time to be cautious and more of a stock pickers environment in here, and to continue, a short-term focus. The XLF, that is the financials, we saw that they broke past that 2720 level that we've been looking at. So it broke past that level last Wednesday and added to those gains. Last Thursday, added to those gains on Friday, and today we've seen a little bit of pullback. Let's go back to the daily time frame again. We can look at the the recent trend line break. So we've got, this market remains in a healthy uptrend. I think 27 is going to be an important level for the buyers to hopefully hold on to the momentum if it holds above that 27 level. Otherwise, we could see a little bit further pullback, maybe down towards this 26.5 level. And you can see 27 is maybe going to become a little bit more important, because that's also where we have that rising trend line here on the intraday time frame. So, the XLF clearly on the weekly time frame is a problematic group, but it's starting to recover in here on the daily time frame. As I said last week, though, when we're in the context of a much bigger decline, and this 200-day moving average remains declining at such a rapid pace, that you want to be careful and quick to take your profits when you do trade the long side. I think getting back up above this level here at about 2770, then you're going to see maybe the next burst higher. But for now, we have this little series of lower highs and lower lows on the 10-minute time frame, and that's a good time just to be cautious. The Russell 2000 we saw did briefly on Friday gap above that important $73 level, but only held above there for about really a half hour or so. And on this 10-minute time frame, we've got the same thing we just pointed out on the XLF, which is a pattern of lower highs and lower lows. On the daily time frame, let's just again point out the importance of this $73 level, and that's also approximately where we see this downtrend line coming into play as well. So a couple reasons to think that may continue to offer some resistance in there. This trend line looks pretty important, so what we'll do is look at that on the 30-minute time frame. You can see now down towards about 71.5 is where that would meet up with this market. And really, I think the more important level of support going forward here the next week or so is going to be the $71 level. I wouldn't actually be surprised to see it pull back down towards that level. And right now, in the short term, again, the trend on the 10-minute time frame suggests it's time to be cautious with longs because we have a pattern of lower highs and lower lows in here. The 2-minute time frame, same thing. You'd see that over the course of 2 days, the average price has been up at about 72.5. So we've got a declining VWAP in here. And for today, we saw the same thing as well. Actually, not because again, this market was pretty choppy the way I pointed out on the S&P 500, but it did close above the daily VWAP and saw some late day volume in here. So short term, I think probably let's just give it the buyers the benefit of the doubt. I think above 72.40, pushing back above 72.40. Then I think we may see another test of the $73 level, and perhaps it can hold. We'll see. By the way, you didn't think I was not going to promote this again. Here's another review. This one's from Larry McMillan, the options strategist. Larry's considered, one of the main experts when it comes to options trading. I got him an early copy of my book, an electronic copy, and here's what he had to say about it. You can see the full review at technicalanalysisbook.com, and be sure to click that button that says "Look Inside," because you get to see sample pages there as well. And on the NASDAQ 100, we saw this market lose 14 cents today, so obviously still holding up in here. But the key level of resistance this market broke past was 46, and it's holding nicely. Continues to hold nicely above there. The next level of potential support, it'd be really nice to see that maybe this 200-day moving average could hold as support for the market. I think that what's likely to occur is we probably drop down through there for a day or two, and then if the buyers will come back in, they'll come in after it's broken back down to the downside. So looks like we might be in for a little bit more consolidation in the markets in here. I'm just going to draw this trend line back in again just to show again how relatively strong the NASDAQ 100 has been compared to the other markets. On the 30-minute time frame, we've got this real nice, pretty uninterrupted trend here. And a little bit of consolidation through time would not be a bad thing for this, and maybe even a pullback down towards 47 over the next few days. But it does seem as though this market will need to pull back a little bit and consolidate before it can gather enough energy for another push higher, if that's what's in the cards.